Bharadwaj are the Senior Vice President at Sai Silks and find out how their sales so far have been. Bharadwaj, great to have you on the show. Just wanted to get a sense on how the festive sales so far have been and whether they are stronger than what you anticipated.
First of all, thank you for having me. As you know, Sai Silks Kalamandir Limited is one of the country's largest women's ethnic wear retailers, especially with a strong dominance and leadership in saree retailing. Over the last 2 decades, especially, I think we've spanned over from 20 cities, operating more than 7.5 lakh square feet of retail area. Majorly we are known through our multiple formats which cater to different segments of the society. So now when you look at what happened last year, especially the retail sector saw muted consumption. Like several factors could contribute to this, right? So a weak wedding season calendar, the macroeconomic pressures such as inflations and cautious consumer sentiments are majorly the reasons why we saw a muted consumption last year. However, from this April onwards, we've witnessed a clear recovery trend. This has been majorly driven by a healthy calendar of wedding dates. Generally in retail, this is the most important factor that we all look up to. And not to also ignore the government initiatives such as like from the recent union budget that has helped consumers get increased disposable income. And also not to forget from September 22nd onwards with respect to the next generation GST reforms have been helping the overall consumer sentiment. And what it has really helped is putting more money into the pockets of consumers. And all these things are actually panning out in favor because we were all thinking about the GST 2.0 reforms would take in effect from Diwali onwards, but it has kicked in a little bit early. And dashara onwards, we have seen all of these consumer sentiments coming into our stores. And it's been good. We've just completed the dashara this year, especially if you look at dashara when we compare to last year, has been about 2 weeks early. That means the early onset of dashara is generally a good thing, and therefore we have seen a clear recovery trend. And from where we currently look at, I think the remaining 2 quarters, which is Q3 and Q4, are also having a healthy pipeline of weddings, festivities, and celebrations. And SSKL is at the center of this whole growth story, so we are excited about the future coming ahead.
How much does the GST rate cut help you, Bharadwaj? Give us that perspective.
So yeah, absolutely. So for us, majority of what we retail is sarees. So sarees is across all multiple price points, it's 5% category only. So with respect to that, the company has not been majorly been affected for. But also we do have some other celebratory wear such as lehengas, kurtas. In this particular category, I think from 1,000 rupees to 2,500 rupees. We have taken about a 6.25% kind of a discount that we were able to offer to all our consumers, and all our retail stores have had big displays of the kind of GST rate cuts that we've had, and we've shown that in our bill formats that this is the amount of discount that you're able to save through GST, and that generally is something that people are able to come to our stores, understand, because all these numbers seems to be a little tricky. But we made the signages and the entire visual merchandising display much more favorable. So when a customer walks in, he'll be able to understand beyond the kind of product value that they get. There's also additional savings that the consumer gets, and everything is working in favor to the consumer here.
So tell me, what's the kind of mix that you have in terms of the demand from tier 1 cities and then of course tier 2 and beyond, and more importantly, what expansion plans beyond South India?
See, in terms of tier 1, tier 2, especially this year, tier 1 as well as tier 2 demand is slowly increasing, right? So a majority, if I have to attribute, I think the consumer behavior is also changing. See, we often refer it to as the avocado toast and expensive coffee analogy. So wherein people are spending more on smaller luxuries and that make them feel good and express their individuality. Especially when big ticket items such as gold, real estate, or let's say vehicles are becoming over and increasingly expensive. And this is especially more relevant when it comes down to festivities or weddings and celebrations where everybody want to showcase their wealth or maybe they showcase their expression to what they wear. So SSKL stands at the very center of this whole growth story, and therefore be it tier 1, tier 2, when the disposable income generally increases, when there's more money in consumers' pocket, the easiest way that the consumers can go and splurge the money would be in terms of the fashion and apparel category. And especially people go a little bit overboard. People have a little bit more of a budget when it comes down to celebrations and event occasion wear. And as we speak, I think to your question about where the expansion strategies, I think we've opened more than 74 locations as of today. We have opened a square feet about more than 7.5 lakh square feet of retail area. And as we look at the next couple of quarters, we plan to end this year by adding another 30 to 35,000 square feet of retail area. And that's for this particular financial year. But on a long-term basis, we're looking at about 8 to 10% kind of a retail square feet addition year on year. The best part about what we do as a scale is we have an expansion, a cluster-based expansion approach, meaning currently the entire 7.5 lakh square feet of retail area is just coming from 4 states.
Sure.
So we have like a lot more cities, lot more states to explore, and we are very excited about it.
Sure. Okay. Talk to us a bit about inventory, because that's the one thing which is weighing down with regard to where your balance sheet and your numbers are concerned. Give us the medium term. What's the outlook looking like? Are you looking to trim that at all? Or is that just part of the model? How should one look at that?
See, in general, as you rightly said, I think the inventory, especially in saree retailing, the model itself is evolved around having a large amount of inventory for us to be able to command a very, very high productivity. Like when we compare to any normal like a value fashion retailer, it comes to ethnic fashion, we have very high throughputs. When you say throughputs, revenue per square feet are much higher. For us to be able to command this sort of a throughput, inventory is generally, by and large, generally more than what is when we compare to the remaining other forms of traditional apparel retail. But on the overall, I think we have been very cautious about how we try to like expand and what kind of inventory that we need to maintain. I think in the last couple of years, in the last 1-2 years, we have been able to show progress in terms of reduction in inventory. And majorly the factors involve like, all of these stores coming in a cluster method, and we are able to bring in like, cash discounts when it comes to vendors, and we're able to like, service every store with backup inventories. So we are playing majority of these elements are actually contributing to reduce inventory levels. And generally, when you look at inventory, the end of Q1, Q2, Q3 is generally on the onset of festivities. So that would not be the right aspect to look at. But when you look at financial year end, when compared to March, we have been showing signs of inventory recovery. And the trend as we go is in the next couple of years, we should be able to see a decent to good amount of inventory reduction, and the inventory turnover should be much, much better than where we currently stand.
Right. Okay, Bharadwaj, great to have you on the show. And thanks once again for giving us the color on how you're seeing your sales actually pan out. The stock, of course, also holding up quite smartly in trade as we speak right now, but very muted a market, not really seeing any meaningful moves other than, of course, hospitals. We'll take a very quick break, come right back. We'll continue discussing markets.